All right, here we go. Welcome back to another down day on the market, or in the market, I should say. Man, it was rough today, wasn't it? Well, thank you for joining me for a quick take on the markets. I'll make it as quick as possible. I know it is a Friday evening and you want to get going and doing your own thing, and that's cool. Or you can be watching the replay of this, but anyway, whether you're live with me now or watching the replay, I greatly appreciate you being here. All right, let's just get into it. I am very sad to report that our expectations for the market from yesterday's live stream, well, they were right on the target. The S&P 500 dropped to 3.6% on Friday in an orderly retreat fueled by disappointing earnings news and persistent inflation pressures. The Dow Jones, it lost big, 2.8%. The Russell 2000, it fell 2.9%. While the Nasdaq, it was the big underperformer badly with a 4.2% decline. The losses were widespread too. It wasn't just in one particular sector. All 11 S&P 500 sectors were lower, with losses ranging from 2% in the materials sector to 5.9% down in consumer discretionary. 28 of the 30 Dow Jones stocks closed lower. So this was definitely broad-based. And declining stocks, or stocks that were declining, they outnumbered stocks that were climbing by a margin of 4-1 at the New York Stock Exchange, and even worse at the Nasdaq, with a margin of 5-2 at the Nasdaq. That's horrible. It's just a horrible day all around. Amazon was a big dog in this market, pulling it back. It was probably the biggest drag on the market. Amazon fell 14% and another 0.4% in the after hours, after revenue and operating income guidance for the second quarter was disappointing. They also reported disappointing guidance, and that reminded investors about the slower growth prospects in an inflationary environment, right? The second half of this year, I've been saying it since day one of this year, is going to be worse than the first half of this year. Pricing pressures were further illustrated by Apple. AAPL is the ticker symbol. Apple was warning of higher supply chain costs in fiscal year or fiscal year 22, quarter 3. And there was a 6.6% year-over-year increase in the PCE price index for March, and a 1.4% increase in the Q1 employment cost index. They were just shining a light on inflation everywhere that we looked in the market. There was inflation being talked about. All these earnings that have come out so far, and there's a big whopping load of earnings coming out next week, the first week of a fresh month. Could it be better? I'm not so sure. I did a piece for our Patreon members. It was actually pretty long this week, and I talked about the Fed is about to do ... right? Keep you in suspense. The Fed meets next week, the 3rd and the 4th of next week. It's not going to be pretty. Now I'm not going to share everything that I shared with Patreon members, because that's a privilege for you guys. And if you want to check that out, click the first link in the description or the link in the live chat. But the Fed, it has to fight inflation. The Fed has a mandate right now, and there's two parts to it. One is unemployment. The other part is inflation. The only way the Fed can fight inflation, because it's winning on unemployment at the moment. Unemployment, that's good. That's good right now. But what's not good is inflation. And the Fed's got to fight that. And the only way they can fight that is by raising interest rates, by sucking money out of the market like a big old vacuum cleaner. Unfortunately, the market's going to take a hit because of this action. And it's partly to blame for the Fed. The Fed should have raised rates sooner. They didn't. They're behind the curve on inflation, and now they've got to fight it. and it's running way ahead of them, and they're trying to pull it back, but they can't quite get a hold of it. And it's going to hurt the market. And we're going to have days like we did SPX, the ticker symbol, when I'm looking at the S&P 500 on TradingView. And there is a link in the description of this video for a free account for TradingView. It's where we do all of our charting. It's awesome. Look at this big red candle for today. Volume is hidden. I'm going to bring volume back on here. I got to raise the candles up just a little bit so we can get a better view of this volume. Volume has been increasing, right? As panic sets into the market and people start to sell. As their stop losses get triggered. And then, obviously, that's another sell. More selling pressure in the market. So with volume rising, right? The RSI is declining. Money flow index is declining, and it's declining quick. It's not something that's subtly going down. I mean, these are big shocks, right? All right, I'm going to hide volume for just a moment, and I'm going to bring this in a little bit tighter. I want to look really, really close at today and February the 24th. If we look at February the 24th, it's a big green candle, right? This was a day the market dropped to this low point on the S&P 500. 41.14 was the low on that day. What was today's low? Today's low was 41.24. So a few points away from breaking the low right here on February the 24th. Now, we've already broken the low on March the 14th, and we broke the low that was even lower than March the 14th on March the 8th. Unfortunately, next week, I think we are going outside of this yellow box. And we're going to break below this low that was made here on February the 24th of 41.14 on the S&P 500. And the reason I'm feeling confident that that's what's going to happen is if I shrink this up a little bit here, get this just right. This low that was made here in the initial fall after our all-time high back on January the 24th. This was a low of, I got to move the chart just a little bit so I can see it. 42.22. All right. We broke that, right? We're at 41.31. That's where we closed today. And then we have a lower low on February the 24th, and that's the 41.14. Unfortunately, if we continue following this downtrend right here and we make another low, this is a very, very steep fall. I mean, look at this wide open space to get to this bottom trend line. And it's a possible trend line. We only have 2 points of contact. We need 3 or more. On any trend line that you put on a chart, you need 3 or more contact points. We only have 2 right now. If we make a third one, we're going to break into 3,900, maybe even 3,800 on the S&P 500 if it goes that low. And if we measure from the all-time high that was made here on January the 4th, just one day after the market opened, after the holiday break, and we go down 20%. All right, I just want to go down 20%. The market can do this. The S&P 500 can fall 20%. And guess what? That would put us right here on this trend line. The Nasdaq is already down over 20%. Once you reach 20%, you are technically in a bear market. And with the Fed, with its back against the wall, having to raise rates, we could be at 3% at the end of the year. That's big. That's a lot of rate hikes between now and December. And I know a lot can change between now and December. I mean, look at the market right now. It's down, the S&P 500, it's down 13.3% year to date. The market can drop to 20% and the Fed won't care. I know there's a lot of young investors out there, especially if you're watching this on YouTube, you're probably a younger investor. Younger investors, especially those that are really fresh, that have only been in the market for a year or two, and have only known a market that has gone up and a Fed that has been ultra accommodating. The Fed's not going to come in and save the market at a 13.3% year-to-date drop. The Fed is not going to run in and save the market at a 15% drop or even a 20% drop. And unfortunately, after digging into the data and the research we've done, I think the market can fall 20% this year. I think it can hit this point right here. Right here, this target point right here, the bottom right side of this red box, okay? That's where the trend line is going, and that's 20%. We're almost there. We're over halfway there, down 13.3%. So we're close. We're not that far off. I still, though, in my thesis on the year, I still think if the Fed does manage to get inflation under control by raising rates quickly, 50 basis points this next week, and then another 50, maybe that can do something to inflation. Unfortunately, I don't think it will. But if it does, and the Fed then turns to be more dovish, then the market will turn around. And only then will the market really turn around. And we won't have these little hops of green days. So just think about this when you're planning on investing right now. That the market, the S&P 500, when I say the market, I'm generally talking about the S&P 500 because there's 500 stocks in there. That's got the biggest breadth of the market. So it could drop 20% very easily. And if the S&P did that, the Nasdaq unfortunately would drop even more. So this is what we're staring at. A Fed that is going to be very aggressive because their mandate is to get inflation under control while keeping unemployment low. Now, if you want to know more details about this, then definitely click the first link in the description. Join us over on Patreon. I shared a whole bunch over there today. Very useful. Also, we've got our 40 stocks in different categories. You'd love it. It's very helpful. Okay, moving on from this, I want to talk about some other aspects of the market today. We're clear this, take that 20% away. We don't want to look at that, right? That's a scary number. Yeah, that's part of it, right? All right, so we had Intel report, ticker symbol INTC. We had Chevron, CVX, and ExxonMobil, ticker symbol XOM. They all fell sharply following their earnings reports, while Honeywell, ticker symbol HON, it actually closed higher after providing favorable earnings and guidance for a change. You know, the inflation data this week reinforced expectations for the Fed to shift into a tighter policy stance with the intent to rein in inflationary pressures like we just were talking about. And like I mentioned about the Fed raising rates, the CME Fed Watch tool was pricing in an 88.4% probability for a 75% basis point rate hike in June, in addition to the 50 basis point rate hike That's expected next week, almost guaranteed. These expectations were also evident in the Treasury market. Looking at the 2-year, US02Y is how you get there on TradingView. It increased 5 basis points to 2.69%. Now it's even higher. In the 10-year, US10Y, so look at the 10-year, it increased 2 basis points to 2.89%. Then we've got crude oil staying above $100 a barrel, but it did decrease just a little bit, 0.3% today, to $105 a barrel. Oh, and Elon Musk, yeah, let's look at Tesla, TSLA. Look at Tesla. Elon Musk said that he has no further plans of selling any more shares of Tesla after selling over $8 billion worth of Tesla stock this week. Now, who knows what he's going to do with that $8 billion, but most likely it's going towards his purchase of Twitter, I would imagine, right? So Tesla has been in a pretty big fall. I mean, look at this. But it's held up pretty well. Obviously, the day that the news came out of Elon Musk buying Twitter, it dropped that 12% there. But look at this. It's been kind of moving sideways since getting down under this $900, and now we're down to $870 right now. After hours, it's actually up 0.4%, back up to $874. But it's holding up pretty well. It's kind of bouncing underneath this 200-day moving average. That's kind of acting as resistance right now. So that's Tesla. Let's look a little closer at some of the economic data that was released today. Personal income, that increased 0.5% month over month. Personal spending, that jumped 1.1% month over month. The PCE price index surged 0.9% month over month, which took the year-over-year rate to 6.6% from 6.3% in February. The key takeaway here is that the real disposable personal income declined 0.4% in March, which helps to explain why the personal savings rate as a percentage of disposable personal, I don't know why I'm mixing that word up, personal income dipped to 6.2% from 6.8%. In other words, consumers were spending out of their savings, presumably to maintain their standard of living in the face of these higher costs and inflation, which isn't a good thing. You don't want people, a large group of people, dwindling down their savings accounts to maintain a certain lifestyle. We all have to make cuts. As inflation goes up and wages don't quite get up as high, we have to make cuts in our lives on certain things, right? The Q1 employment cost index increased 1.4% on a seasonally adjusted basis for the 3-month ending in March. Wages and salaries, which account for about 70% of compensation, increased 1.2%. And benefit costs, which make up the remainder of the compensation cost, increased 1.8% for civilian workers. The main takeaway is that wages and salaries for workers were up from the same period a year ago. Yet those gains have not been keeping up with inflation, not even close, evidenced by the 7% increase in the PCE price index. And that was seen in the advanced Q1 GDP report. The final University of Michigan index on consumer sentiment, for April, it dropped 65.2 from the preliminary reading of 65.7. So the final reading for March was 59.4. The April uptick was nice to see, although the April reading is one of the lowest readings in over 10 years. The main point here is that the improvement was driven largely by an expectation that gas prices would stay the same or maybe tick down a little. But there wasn't much improvement in the overall sentiment index. That's bad. It's at its worst level in a decade. Here's where we stand year to date. The Dow Jones is down 9.3% year to date. The S&P 500, 13.3% year to date. The Russell 2000 is down 17% year to date. And the Nasdaq, man, 21.2% down year to date. All right. So there's some thoughts on the market today. What's going on? I'll take it back over here to the S&P 500. And let's see what questions we can get here. Can you make a video on Qualcomm? They did good. They did gooder this week. Okay. Let's look here for Qualcomm. They reported their Q2 earnings this week. Let's see here. They actually did pretty decent. The fears of a chip downturn seem to be a little bit overblown. Looking at a few notes here about it. Yeah, I can definitely do a video here on Qualcomm. Let's see here. Now, one thing that's interesting is Intel had its earnings report, and it didn't fare so well. But Qualcomm did. I think it's mainly due to the diversification that it made to its business model. That was a big impact. And it's got a multitude of growth catalysts ahead for it. So I'll definitely do a video on Qualcomm. As a matter of fact, when I wrap up this live stream, I'll go ahead and start putting some notes together to get that out. I'll probably upload it tomorrow. Get the video made this evening and then get it uploaded tomorrow for Qualcomm. Thank you for the question. I greatly appreciate it. And I'll definitely dig into that a little bit deeper on their Q2 earnings report. I greatly appreciate the question. All right. If that is everything for today, we'll wrap it up here. If you could help us out by clicking that like button. Also, share this video wherever you can. Just take the URL and copy and paste wherever you can. That would be great. That helps out a lot. Also, click that first link in the description. A lot of great information that we release over there on Patreon. We'd love to have you over there. Lots of good information, especially in this market that is unstable, if we can put it into some sort of perspective. All right, well, that'll wrap it up for this evening for a quick take on the market. Thank you so very much for watching. I'll get working on that Qualcomm video and get that out there. And if there's any other questions, just leave them in the comments, and I'll be happy to go over them. All right. Thank you, ladies and gentlemen, for joining me today. And you have a great weekend. I'll see you back here live Monday after the market has closed. And oh, make sure you are subscribed so you get all the videos that we put out. All right. Thank you again. I greatly appreciate it. And I will see you in the next video. Oh, sorry. Hold on. Pause there for just a moment. I see that SPY RSI is 35, close to bottom 30. All right. Looking at the S&P 500, and then I'll jump over to the SPY. The S&P 500 is at a 32.2. 32.2. That is way oversold. It would not surprise me next week if we get little bounces like we had earlier this week. You know, the 2 little green days that we did have this week, because once the market gets oversold, even when it's in a downtrend, it will have days when it bounces, right? And you'll get green days like we did this week, even though the week was down considerably for the week and definitely way down for the month. The RSI is definitely at a bottom. The local bottom for the RSI was probably somewhere around a 40% or 40 points, and it's down to 32. So that's definitely getting into oversold territory. Now, let me put the SPY up here so we can look at that as well. All right, so same thing. It's at 32.6, right? 32.6 is where it closed today. That is below its local low of about a 40.2. A 40.2 was its low on April the 22nd, and also real close, it was a 41.1 on April the 18th. That was the local low, recent low, right? Well, it broke below that this week, bringing its local low now down lower. The money flow, it has been falling since April the 4th, barely getting any inclines out of it whatsoever. It is way oversold at a 23.8, but we can go lower. If we go back to my head is hiding it, so let me bring it over here. If we go back here to January the 24th, that was a low on RSI of a 21.1. It was a low on money flow of 13.8. And that was here, right in the middle of your screen. It was a candle, not too big of a candle, but it has a humongous wick on the bottom of the candle. It's a green candle, big wick on the bottom. We hit a low on the SPY of 420. 420. We're under that now, big time. But that was the low, and it closed at a 439. So big room to move when the market is oversold. And if we go look at where we are right now, the market can get down to a 21 because it's done it recently, this year, just a couple months ago. With it being at a 32.6, look at where we were on April the 25th, which was what, Monday, right? On Monday, we had the RSI reading at a 38, and we bounced. We bounced off of a 38, and then we got down to a 29 and bounced on that. Then a 33.4, and we bounced on that. So whenever the market is oversold, like it is right now, you can get nice bounces. So I guess that's what I'm trying to say. Even though the market is extremely oversold, it can go lower. Your prediction there, it's at a 35, going down to a 30. It could definitely get 30. I mean, it's at a 32.6 right this moment. But we can get good bounces from this. I guess that's all I'm trying to say there. Yes, we can definitely go to 30. We're 2.6 points away from being at 30. And the money flow is just bottoming right now at a 23.8 on money flow. The last time we were at a 20 on money flow. Let's see here. Man, we really do have to go all the way back here to this big dip on January the 24th when it dipped down to a 13.8 for the money flow. The RSI, 21.1. That was a big, big dip. So it's been several months since we've dipped that far on relative strength and on money flow. So it's definitely possible next week, because with the Fed meeting next week, that's going to make the markets very nervous, very wobbly. And when the Fed comes out and says, yeah, 50 basis point rate hike, man, that's where we're going, and the market's just going to freak out over that. Even though it should provide some comfort that at least they have a plan, right? So, yeah, I think I just rambled there just a little bit, but Richard, you're right. The SPY RSI being this low, it can go a little lower, But when it is this low, when it is oversold like this, that's when you can look for the bounces. The market doesn't go straight down, just like the market doesn't go straight up. And we are way oversold right now. Okay. All right. That'll wrap it up for today. Thank you for your questions. I greatly appreciate it. And let's see here. If it's down more, big trouble. How about bank stocks? Its bottom and interest rising will help. What's your opinion? Okay. Bank stocks, you would think in a rising interest rate environment, that would be good for banks. And it is. But the other problem that we're having right now is that with the reports that were just released today on the economy, on wages and spending, people are spending from their savings. Whenever people are spending from their savings, at some point, one of two things will happen. Either they have to change something in their life to cut costs, or they start defaulting on credit card loans, on mortgages, car loans. That happens. This past, or when the banks reported last week or the week before, it was very recently, to kick off this second quarter, they reported that they are increasing their expectations for people to default. That will be a problem for banks. If we look at, let's see here, one bank that a lot of investors like is Ally. I like them too. I think they do a pretty good job, right? But look at the stock chart though. This is the daily view for, yeah, my crazy scribbling there. This is the daily view for Ally. It's a regional bank, okay, or a group of regional banks. Even though interest rates are increasing, they're still having a tough time. And this is one of my favorite of the bank stocks, right? Even the bigger banks are having a tough time right now because the economy is slowing down. When the economy is slowing down, that means, and you would think this would be counterintuitive, when rate hikes happen, right? The Fed may raise the rate by 25 basis points, which is 0.25%. The bank, well, they can raise their rates as high as they want to, as high as a consumer will pay. So if the Fed raises their rate by 25 basis points, a bank could go out and raise their mortgage rates, by a whole point, because that's how they make their money off of lending. But as rates go up, there's less borrowing, there's less spending. A bank is going to make less money. See, this time is a little bit different than other times in the economy because inflation is high and the economy is slowing down. That's not a good mix, even for banks. So I don't think banks are going to do particularly well until inflation is back under control. Because then your regular consumer out there will have more money that they can spend. So just keep in mind, even though that rates are going up, that doesn't necessarily mean it's a good thing for banks because it's going to price people out of borrowing. It'll slow down consumption. It'll slow down lending. And it's all because of inflation. So until inflation gets under control, banks aren't going to do very well. Much like everything else. It's just going to kind of suck for a little while. Just trying to be as honest as possible and as clear as possible. And I know it's not very sugary coated, but it's real. Until inflation is under control, not a lot of companies are going to do very good. And it's going to be a tough, very tough, really tough to get out of this predicament that we're in. Inflation is just too high. And it's hurting the consumer, which is in turn hurts the companies, which in turn hurts their stock. So yeah, I'm not sure if that really answers your question, but at least my feelings and thoughts on it. Take it with a grain of salt, add it to your own theory on what's happening, your own hypothesis, and just use it how you will. You are very welcome, Richard. I appreciate the questions. Greatly appreciate it. Let's see here. Do you think the market has priced in the 50 rate hike? All right, 50 basis point rate hike. Yes, I do. Let me go back to the S&P 500 candles here. One of the big reasons the market fell so hard over the past week and a half is because the market was pricing in the 50 basis point rate hike. The CBE Fed Watch tool, it has an 88% probability of a 75 basis point rate hike right now. It has priced in 100% for a 50 basis point rate hike next week. So when the FOMC meeting occurs next week on the 3rd and the 4th of May, when Jerome Powell comes out on the afternoon of the 4th, obviously we get the press release before he speaks, but there's 100% right now that it will be a 50 basis point increase. The market has priced that in. That's what happened over this past week and a half. What the market hasn't priced in is what's going to happen next, right? After May's, and I've got it written down right here, after May's rate hike of 50 basis points, on June the 14th and June the 15th, we could see another 50 basis point rate hike. That is not priced in yet. That part is not priced in yet. The June meeting is not priced in. That's why at the beginning of this video, when I got your attention to this trend line down here, this purple trend line at the bottom down here, it looks like it's a long ways away from where we are right now. And it is, but it fits perfectly into my theory here. With the market reaching its top on January the 4th, if we bring this down here, right here, to the bottom of this mark, I'll go a little bit past it so it's in there nice. Right there. That's a 20% drop in the S&P 500. That's where I think the market is heading. And unfortunately, the Fed has been very accommodating to the market. But right now, the Fed has a mandate of keeping unemployment low and keeping inflation at 2%. They're fine on the unemployment right now. That's under 4%. That's good. That's okay. They're not good on inflation right now. And I just wrote a very long note. It's for Patreon members click the first link in the description. You can go over there. You can see it. Share it for all of everyone over there. On details on why I think the market is going this low. Why I think it's going to at least this 20% from our high on January the 4th. And it matches up perfectly with this trend line. And this trend line is drawn. It's not perfect yet because there's only 2 contact points. Our first contact point is January the 24th. Our second contact point is February the 24th. So the market is making a lower low. The next time it touches this trend line would be the third contact point, and it would secure this trend line and the market making a lower low. And I still think there's a lower low to be had in this market. Now, once the Fed kind of changes its stance, once inflation is under control, and this could be 3 to 6 months from now before inflation is coming down, or even longer. Who knows what it's going to take to really get this inflation down. But once it does come down and the Fed then changes its stance to not being as hawkish, to being a little more calm and dovish, and maybe slowing down, pumping the brakes on rate hikes, that's when the market will turn around. But I don't have a crystal ball or a date on when I think that could occur. And also remember, as the market is going down, just like the market can't go straight up, the market doesn't go straight down, even though it seems like it can over the past week. But you do have bounces when the market gets oversold. And that's what we had a couple times this past week. We had a couple bounces because the market was really oversold. The market's oversold right now. We could see a little bounce on Monday. But yeah, so yes, it's the 50 basis points priced in, but what happens next is not. And I guess I went a little overboard there on an explanation, but I hope you understand it. And if you have any other questions, please feel free to leave them in the comments. All right, well, I was gonna wrap this up. Just making sure I don't have any other questions in there. Feel free to ask questions, even if you're watching the replay of this. Just go ahead. Just sharing my thoughts there. Hope you appreciate the perspective. If you can, if you do, make sure to click the first link in the description. We'd love to see you over there on our Patreon. Also, something very easy to do is click the like button, share this video wherever you can, and make sure you're subscribed. That also helps. Let's see here. Do you look at the SPY or SPX while trading? I look at the SPX because I use a couple of things here. I use the SPX, but I don't just use the SPX. I use the SPXS. Okay? A fourth letter there, an S. That's the direction inverse of the S&P 500. So today we had a great day. The market went down, which is unfortunate, but when you're trading over here, down days are good days. So we were up 11% today over on SPXS. It's an ETN, so it tracks the S&P 500, but it's an inverse of the S&P 500. And it's also leveraged 3x. So if the S&P 500 drops 1%, this goes up by 3%. But yeah, this is the one I've been using as the market's been going down this year. And then there's also the SPXL, which is when the market is bullish, like when we had our snapback rally back here at the end of March. That's when I rode this one out, rode the wave there. So these are the two that I use when I'm trading, but I base all of my decisions on SPX. But I usually trade with the S and the L, short and long, to get that leveraged and little bonus there. But those two accounts are leveraged, so you do have to be careful if you think about going that direction, because things can turn around real quick for you. But yeah, so yeah, the SPX is what I use to base my decisions on. All right, any other questions? Feel free to ask them. I'll sit here for a couple minutes and make sure every question is answered. I will work on that Qualcomm video, like I mentioned. All right, got it. Let's see here. What are your thoughts on semiconductors like Nvidia and AMD? Well, Qualcomm had their earnings report, their Q2 earnings report, yesterday on Thursday, and they did really good. And QCOM for Qualcomm. They had a good earnings report, really good. Beat EPS by almost 9%, beat on revenue by nearly 5%, and investors got rewarded for a day. There was a nice jump there of nearly 10%. But half of that was given back today, and more will probably be given back over the next several days. But Qualcomm is, I think, really strong. They have a diversified business model, which is excellent, especially in a slowing economy. Out of AMD and Nvidia, I would definitely go Nvidia. NVDA. The one thing about Nvidia that I would say is that they are definitely sliding down, which isn't necessarily a bad thing. Earnings are coming up, in 26 days. We still have a little while before their earnings come out. I like Nvidia as a company better than AMD, but the valuation for Nvidia, I mean, we all know it really got ahead of itself. So this pullback in Nvidia, I'm waiting for it to come back down a little bit further. Like, it's in a range right now, Nvidia. But it's going to go lower. In this range, it was locked in back here in June and July of 2021. It was locked in this range with support right around 185 and resistance right around the $205 mark. It bounced around in there for a couple months. That's where it's kind of trying to bounce around right now, but unfortunately it's got a lot of pressure pushing it down. And if Nvidia got down to 135, that's where I would really like to get in. Because if we look here on the chart, I'm going to go back a little bit further here. But there's this area. Let me get a tool out here. There's this area right here for Nvidia that I really like, and I think it can come down to. This should be green, not red. This would be good. if Nvidia got down here, 135, 145 in this box, that's where I'm a buyer for Nvidia. And that's where I think the valuation becomes really attractive. And I do think Nvidia can get down to this box. If I pull this thing over, I mean, really, how much further do we have to go? Where Nvidia's at now, to get just to tap this box, it's another 20%. I think it's doable. And it's up against strong resistance right here. This resistance has been tough for Nvidia. During that snapback rally, that's when it was able to break above it, but that was like a whole market approach to get it to break that resistance. And I really like Nvidia, but I want that valuation to come down some to make it a little more sweeter, right? Where it's at right now, it's a market cap of $464 billion. Last quarter, they did $7.6 billion. So I think the valuation needs to come down more. And if we go look at AMD, even though I'm not a huge fan, I definitely like Nvidia better. And Qualcomm's has some neat things going for it. Nvidia is closer to its, I think, true valuation. They did 4.8 billion last quarter, and they're at their market cap right now is at 138 billion, right? So I think the valuation is closer, and you can see AMD back here. If I were to put a box around it in this one area right about here, that's a good valuation for AMD, and it's in that box right now. If I were to pull this box over, it's in that box right now. So I like Nvidia more than AMD. AMD, their valuation is in my comfort zone or my sweet spot. Nvidia, it needs to come down another 20% before it gets to that point, if that makes sense. Made a killing on Nvidia puts today. Yeah, it came down. Yeah, Nvidia, it did 6%, 6.2%. Yeah. And I do think that Nvidia, this 20% that it would need to drop to get to my sweet spot, I think it can do it. Especially with the economy slowing down, interest rates going up, so future cash flow is being impacted by that in a negative way. So yeah. Let's see here. Any other questions? Or if you have a question, feel free to ask. That's why I'm doing this. That's why I do the live streams. Every day the market is closed. Every day the market is opened. Duh. After it closes. Let's see here. I did short all my Tesla shares, so it's up and down even. Then I will buy to cover when it's in bullish market trends. Generally, do you think it's right strategy to lock in my profit? Yes. Investors, one of the biggest problems I had when I was a new investor is knowing when to take your profit. And it's one of the hardest lessons to learn, because once you're up 5%, then you're up 10%, 15, 20, whatever it may be. You want to keep riding that wave, and you have no idea really when that wave is going to stop. Don't feel bad on profits that you missed on the profits that you took. So if you take profits after being up 10%, and then it goes up another 5%, don't worry about that extra 5% that you missed. Be thankful for the 10% that you got. And for me, it was a hard lesson to learn. Making sure that I'm taking profits and not trying to let that little greedy voice tempt you into, oh, let's just ride it a little bit longer, because it can always come back and bite you in the rear. If I could go back and tell my past self when I started investing to be thankful for the profits you get and don't worry about the profits that you missed. Let's see here. In this market, I just ride the trend. Yeah, that's right. Yeah, the trend is your friend. That's what is commonly known. And as long as you are, oh, that was the wrong. Where's my cursor? There it is. Hello. And as long as you have some sort of a plan, right? The market's not that scary. As long as you have some kind of a plan and you're following something, right? Even if you're just using ETFs or the main indices like the S&P or the Nasdaq, whatever it may be, as long as you have some sort of a game plan for getting in and getting out, and if you're trading, obviously investing is a completely different mindset. And remember that when you take your profit, don't worry about what you missed out on. Just be thankful for what you got. I know I've said that like 3 times now, but it's really something that I wish I could go back to my earlier self and just nail in. But yeah, the trend is definitely trending down right now for most stocks. There's some exceptions out there. Amazon, that was a big drag on the market today because it's got such a huge market cap. Apple too. Apple can really affect the market when it has bigger moves as well. But just looking at Amazon and what they reported in their earnings this week, it's just more evidence that the economy is slowing. I mean, we can all see it. We can all feel it. Inflation is the biggest driver behind it. So, yeah. Okay. Any other questions? I'm happy to answer them. I'll wait another minute or two. Over here, this is Weeble, but out of what I'm watching, what did good today, which is very interesting, is we got our SPXS, which is the S&P 500 inverse, up 11% today. Did really good in that one. DWAC, that thing just bounces all around. That was up 9%. Alibaba, yeah, Chinese stocks did decent today. I guess China said that they're gonna take it a little easier on tech companies, but I just don't trust it. Don't trust it at all. Outlook for next week, it's gonna be rocky. It's gonna be rough. Next week, obviously, the big focus is the FOMC meeting, the 3rd and the 4th. On the 4th is when we'll get the press release and we'll get the press conference. And depending on what's said, we'll move the markets. Now, the markets are oversold right now, but they can go lower. And I do believe next week we'll probably break on the S&P 500 here is what I'm focusing on. We'll probably break this low that was made on February the 24th. We'll also probably see some wobbly bounces next week like we did this week. But I don't think we're going to get a rally or something like that. I could be wrong. I'm not right 100%. But whenever you have the FOMC meeting, the market is always wobbly. Let's see here. What do you think those small cap growth stocks, Kathy Wood investing now? All dropped 60-90%. The situation is really bad. What do you think in some? You know what? This question was asked yesterday by Devin, and I've been thinking on this question. Most of the stocks, you know, she always says that her plan is 5-10 years out, right? Well, let's see here. All right, I'm just pulling. Okay, so let me pull this over here so we can all look at this. All right, this is the RK, right? And I'll cut it out. Okay. If we look here at the top 10 holdings, she's got Tesla at 9.3%, Zoom Video, Roku, Coinbase, Block or Square, however you want to, Exact Science, Unity Software, Teladoc, Twilio, and UiPath. That's the top 10, okay? I think Tesla, yes, Tesla is going to do excellent throughout the next 5 to 10 years. Because that's Kathy's thing, right? Long-term investor, 5-10-year outlook on their holdings. Tesla will do great because Tesla has a lot more than just electric vehicles. A lot more. And that's going to do really, really good for RK. Zoom Video. Right now, the pandemic shifted, right? The way we do business. And it moved us more to being online. But what it did, and just look at what happened with Netflix's earnings. Netflix read the room wrong. Most of what Netflix had during the pandemic were people who might have signed up for Netflix in 2 to 5 years sign up during the pandemic. So it was a pull forward look on their growth. So they took their next 5 years of growth and they condensed it down to 1 or 2 years during the pandemic. So the next 3 years for Netflix might be negative growth or really slow growth because it all happened at once during the pandemic. That's the same thing that you could say for Zoom video. Roku is a little different. Roku has got supply chain issues. So once supply chain issues get worked out, Roku, they could have a good future in the next 5 to 10 years. So 2 out of 3. Coinbase, I think, has a future. I think crypto is here to stay, and I think crypto will continue to expand and grow. And Coinbase is a great platform to facilitate that business. So I think Coinbase will do good in the next 5 to 10 years. So only one so far that I don't like, but that, don't worry, there'll be more. Square, Block, whatever you want to call them, I think they do have a future. I think the next 5 to 10 years will be great for Block. Exact Science, I'm not very familiar with, so I can't comment on that. Unity Software and UiPath, those are definitely 2 futuristic companies, right? They're going to do a lot for the metaverse. So those are 2 that I think are okay. Teladoc, man, the healthcare system is definitely with an older generation, right? Could you see your grandparents? Could you see your mom or dad using video conferencing to talk to their doctor? I can't see my grandparents doing that. Mom and dad, maybe. I like it. But most people still want to see their doctor face to face. And the majority of who is in the age group of needing medical services, needing the healthcare industry, is an older generation who's not technology based. So Teladoc is not a 5 to 10 year picture here. Teladoc is more like a next generation type of investment. That's why it dropped like 40% or something this week. I mean, it dropped hard this week because people don't want to do video conferencing. The older generation who is in the healthcare system, they want to see their doctor face to face. Now, I'm in a wheelchair, right? So I've got good firsthand experience of the healthcare system, and I would rather see my doctor face to face. I feel like I'm getting more accomplished that way. I feel like video chatting, I'm not getting the care that I think I need through video conferencing. It's okay for, getting medication refills or just something simple. But yeah, look at this. What did it drop here? 40.1% after its earnings. So a huge drop. So no, I don't think Teladoc is one for the future. Twilio, that allows video streaming. So what do we have out of the top 10? We've got Tesla, that's a good one. Roku, that's an okay one. Coinbase, I think that's a good one. Block, I think that's a good one. Exact Science, I don't know enough about. Unity Software, yep, I could see that. Teladoc, no. Twilio, no. UiPath, yes. So 6 out of the top 10 I consider Yeah, they would be good holdings long term, 5 to 10 years. So if we put that into, well, how good is she going to do? Well, maybe it's going to, 60% positive because we got 6 out of the 10, right? So that's how I look at ETFs. Break it down. They give you everything they're holding, and you can go in and dissect it however you want. But out of the ARK-K fund in the top 10, 6 of the 10 I think will do good. And what was it? 1, 2, maybe 4 of the 6 are going to do great. So with your question, what do you think about the future here for them? Well, 60% of their top 10 would do okay. So I guess then it's all about the entry price then, right? Because this is long-term investing. Devin, I hope you're watching and catching this, because it's a whole lot easier to describe it instead of write it down as a comment reply back. So if we look at this downtrend, I mean, it's been harsh, right? I mean, what was the high here? 156 or so. 52-week high is 132. So if we go back here and look, right? I mean, we can almost see this. And if we put a trend line here, I mean, it's a slow, oh, went a little far. And go a little bit right there. That's catching those major dips. All right. So if we put a trend line on ARK right here, it's slowly going up. Slowly. Slowly. All right. So we have back here the first contact. We're at, let's see here. We're at a $34 a share. And then we come to the second contact and we're at a $35 a share. Third contact, we're at a $37 per share. So it's going up slowly, which means we need to get ARK-K into this box right here. And what do you know? What do you know? This is the box where if you believe in 5 to 10 years, this is the box where you want to start investing. And it's kind of crazy because look at what happened this week. Look at that. It dipped into this box yesterday and it dipped further into it today. That is very interesting, almost freakish there, that it would line up like that. So this is the buy box for me anyways. You may look at this and see it's completely different. But for investing in these companies that are, 5 to 10 years out, this is the buy box. I guess I would say the bottom is somewhere about $35. And the top of this box is, I guess we could call it $50. That's the highest point, which gives you a big window. That's a big difference there. $35 to $50. big window. $15, right? Spread there. So that's RK for you. So if you believe in what they're holding, and I believe 60% of their top 10 is good for the next 5 to 10 years, and it's getting back into its range, because you know, a lot of this straight up mess that happened here was euphoric, right? And Tesla. And a lot of people are coming down pretty harsh, saying that Kathy was a one-hit wonder with getting Tesla right. Well, you know, 60% of her top 10, I think, are good for the next 5 to 10 years. And the stock has come back down to be in this range where, you know, if you believe, I guess the mid-range here is about $41, $42. That's the price that I'd be willing to pay for something that is 5 to 10 years out. Because you'd want to think that in the next 5 to 10 years, it's going to break back above 100 again, right? So you're going to double your money in 5 to 10 years, maybe triple, getting in at $40, $42 a share. That's what I think would be fair, $40 to $42. Yeah. All right. So let's see here. Any other questions? If not, I'll wrap it up. I do greatly appreciate all the questions. Definitely appreciate the questions. So if you have any more, I'll wait around for another minute or so to see if you have any other questions that I can answer for you. You are welcome. I hope that helps. Okay. Well, man, this has been fun. Real fun. Real fun indeed. All right. So, looking, this is the S&P 500 again. Looking at the March bottom on the S&P 500, and then, going up like 100% or so. What is that? Exactly. From the bare bottom to the top. 120% in a couple years is incredible gains for the S&P 500, for an indice like that. That's incredible. You don't typically see gains like that. And I know there's a lot of younger investors who, that's what they witnessed. That's when they got involved. They were all stuck at home, had to do something. And now we're going to see the downside of what the market can give us. There's a lot of 2008 vibes in the market. There's a lot of 2007 vibes in the market. And, I've looked at this dip extensively back here in 1808. I mean, what was this drop right here? I've measured it before, but I've totally forgot. From top to bottom, a 20% fall, right? And a 20% fall in the S&P lines up perfectly with this trend line right here. The market making a third lower low would be a 20% drop from the high set on January the 4th. So, yeah. Come in late, but I will rewatch. Awesome. I read that completely wrong. Came in late, but will rewatch. Yep. Getting a little dry in the mouth there. All right. Food prices. Let's see here. Food prices rising. It's really high, all food. It is. Related stocks, but some say it will rise more up like oil, gas. Commodity prices, I think, have seen a peak for a while. They ran up really, really far, really fast. And stocks related to restaurants, fast food, I think can do okay, because when you're in high inflation, but you have a strong labor market, people may find it cheaper to go to Taco Bell, go to McDonald's, go to Jack in the Box, Wendy's, instead of buying groceries. So fast food chains, I think, will do well. Grocery stores, I think, will have. I'm kind of 50-50 on grocery stores, because as the economy is going to get worse as the year moves on, more consumers will, instead of buying the brand name foods, they'll start buying the store brand foods, because they got to get their cost under control somehow. And that's one way to get food and cut your costs, getting store brand. And grocery stores have higher margins on their own grocery branded food than they get by selling brand name foods. So that's a plus for grocery stores. But the minus then is the transportation, the inflation of it all. But fast food, Taco Bell will do great. Yum Brands, the ticker symbol is Yum. That's Taco Bell, Pizza Hut, KFC maybe. I think they can do pretty decent. And if you look here, their earnings are coming up this coming week. They're 4 days away. But if you look here at the chart, it's kind of interesting. We can do a trend line just like this. Look at that. So we got point of contact at the bottom on March 14th, which was a low for the market, but we're making higher lows. That's a good thing. Making higher lows is a good thing. So we've got a higher second contact, third contact, and a fourth contact today. So it'll be interesting to see what they say on their earnings call. What is this on May the 4th? May the 4th be with you. Man, that's going to be a interesting day. So Yum Brands, I like Yum Brands. I think people will continue to do fast food. They definitely won't be buying these what pre-made in a box they ship to you. I don't think they'll be doing good. But I do like Yum Brands. Grocery chains, I'm 50-50 on. They can do all right. But it really depends on the inflation key. That's the key to the whole game right now, is inflation. All right, what other questions do we have? And to your question also, you do mention oil and gas there. I think right now, as things kind of level out, unless the war gets way worse, I don't think gas prices are going to go to 140 a barrel. They've kind of moderated here, around the 100, 105, 110. So if I go down here, oh, what did I click on? That's not what I wanted. If we look at crude oil here, 103 right now for crude. And the trend line on it, it is moving up. It's making higher highs there, but it's also making lower highs. Did I say that right? It's making lower highs, and really I should put that right there. It's making lower highs and it's making higher lows. So it's getting squeezed here. So something's gonna pop, right? It's either gonna shoot up or it's gonna break and fall down. We got RSI is increasing, money flow is increasing. We may get another little boost here in oil. It may not be a huge one, but we may get a breakout from this wedge pattern here on crude oil. Beyond Meat, I'm not crazy about Beyond Meat. However, I will put a little asterisk mark there for Beyond Meat. They recently announced that they are doing this humongous retail expansion. If we go look here for go to investor relations for Beyond Meat. Look at news. Let's see here. What do we have? That's about earnings. Yeah, Beyond Meat expands availability of its chicken tenders to 8,000 new outlets nationwide, including grocery, pharmacy, and club stores. That was a big deal. I did a video about this retail expansion for Beyond Meat. So you can search for that on our channel. It should be right around April 12th, maybe 13th or 14th, when the video came out. But I did a video about their retail expansion, and that's a big deal for them. And that should help with their revenue. Unfortunately, it is a growth company, so it's going to take a while for it to play out. Earnings are 12 days away. The retail expansion, it should not have an impact on earnings coming up, but next quarter's earnings, maybe we should start seeing something show up from their retail expansion. But they look like they're kind of hitting some sort of a bottom here over the past 3 months. I mean, look at this. This is pretty interesting. I'm gonna put a line right here at about $35, $35.50. It hit that on April 27th and April 26th, and then back here on March 15th and March 14th. It was a little bit higher, about 36.10, 35.75. So that's interesting. That maybe Beyond Meat is getting some kind of support here at that $35 level. That's interesting. And then their retail expansion on top of that is double interesting. The one thing about Beyond Meat, I'm not sure how big their TAM is, or total addressable market. How many people are going to eat plant burgers? That's the question. That's the question. The McPlant, whatever McDonald's called it. I don't know that there's a big market right now for it. But if one thing that they said either in their last earnings report or it was in the retail expansion notes that they put out, Beyond Meat said that one of the things that was holding them back were, when you go to, a big box store like Costco or BJ's, and they've got those free samples that you can try for, different products. Beyond Meat said by not having those free sample handouts, that's hurt them. So as these big box stores start to do the free samplings again, Beyond Meat says that's one way that they can start to get into consumers' homes, because they just want people to try their product. They believe in it so much that they think people will choose their product because they can't taste the difference. So that was interesting. So Beyond Meat, it's a growth company, and that's not going to do so good in inflationary times and a slowing economy. But it's one that's interesting, and I guess I'll leave it at that for Beyond Meat. But I mean, you can see Beyond Meat's taken a big hit here. I mean, it just keeps falling and falling. But these two bottoms that were hit right around the $35 mark, that's interesting to me. I'll definitely watch their earnings coming up to see what they say. All right. Anything else there? Any other questions? Feel free to ask. Make sure that click that like button. Definitely do that for me. Click that like button. Subscribe. Never miss a video. Any other questions? I'll hang around for a couple more minutes. Okay, here we go. Here we go. All right, let's see here. Let's see here. What was that? CHK? I'm not familiar with that. Oh, is that Chesapeake Energy? Yeah, I'm not sure. $1 away from bankruptcy? Maybe. I don't know. I haven't looked into them. Let's see here. Yeah, Overstock. Yeah, Overstock's not going to do so good. Lost a chance to sell 120 and 100. I just believe their blockchain tech. That's why I kept it. But it's not really working well. No, I don't think they're going to do well at all. If Amazon is saying in their earnings report this week that they're expecting a slowdown in e-commerce shopping, then Overstock is most definitely going to experience a slowdown in their e-commerce. So I'm not holding up any high hopes for Overstock whatsoever. I'd rather buy fractional shares of Amazon than buy Overstock. So yeah. All right. Well, I'll go ahead and wrap up this stream. We've been going now for an hour and a half. I love all the questions. I absolutely love them. Here, every day the market is open. After the market's closed, do a recap of the market, talk about the market, prepare for the next day. So make sure to click that like button, subscribe so you don't miss a video, and share this video. Take the URL, share it wherever you can. And one more thing, if you could, click that first link in the description and join us over there on Patreon. Lots of information over there, ton of information. I greatly appreciate all the questions again. Thank you very, very much. You have a good night too. And I'll see you guys definitely in the next video. Take care. Good night.